Hello, my name is Carl Bush. I'm a realtor in the Denver-Boulder area. One of the most common questions I get is how big of a mortgage payment can I afford? So I created this video to help you determine how big of a mortgage payment you can qualify for. Most lenders will let you borrow up to 42% of your gross monthly income in total debt payments. So let's look at an example of someone with no debt. Let's assume that Bob makes $48,000 per year and is paid on salary. Bob takes home $2,800 per month after taxes, 401k contributions, health insurance, etc., etc. This is what is called net income or take-home pay. This is completely irrelevant to the discussion as far as banks are concerned. I only bring it up since most people think of what they earn as what they take home. In this case, all we care about is Bob's gross income. How much he takes home is not considered by the lenders. However, I would suggest putting together a budget to determine if you can afford the mortgage payment that you are qualified for. However, for purposes of getting a loan, we need to determine your gross monthly income. If you are on salary, you will be paid the same amount every month as far as the banks are concerned, even if you are paid weekly or bi-weekly. However, if you are paid by the hour or by commission, or you get bonus pay and or overtime or some combination of these, you will most likely need to look at your previous 2 years' tax returns and take an average of these earnings to determine your gross monthly income. I will not go into the details of how banks calculate your earnings in these situations since it is a bit more complicated. If you're in a situation like this, I would suggest talking to a mortgage professional to help you determine how much the lender will consider to be your gross monthly income. So let's do the math. Bob's gross yearly income is $48,000. But we will need to convert this into a monthly amount. So let's take $48,000 and divide by 12. This comes out to $4,000 per month. So now we need to determine how much monthly debt payments Bob is qualified to have. So to do this, we need to take Bob's gross monthly income and multiply by 0.42%. So take 4,000 times 0.42, and this equals $1,680. In this case, since Bob has no other debt, he is able to have a total monthly house payment of $1,680. What banks consider to be part of a monthly house payment is principal and interest, property taxes, insurance, private mortgage insurance. Not everyone has to pay this. Banks are not concerned with the cost of your utilities unless they're part of the HOA dues. If you pay utilities directly to the utility company, this is not considered part of your monthly payment. However, lots of HOAs include stuff like trash pickup, water and sewer. If this is part of your HOA dues, then it will be considered as part of your monthly payment. Let's look at another example of someone with debt. In this case, Bob makes $60,000 per year salary. However, he has an $80 per month credit card payment and a $300 per month car payment. Just like the first example, we need to determine the maximum debt payment that Bob is qualified to have. So let's do the math again here. Let's divide Bob's gross yearly income by 12 to determine his gross monthly income. $60,000 divided by 12 equals $5,000. Now let's figure out how much total monthly debt Bob is qualified to have. $5,000 times 0.42 equals $2,100. So Bob is allowed to have a total monthly debt of $2,100. However, he is not able to have a $2,100 per month mortgage. We will need to subtract Bob's other monthly debt payments from this amount. In Bob's case, he has a $300 per month car payment and a minimum payment on his credit card of $80. The total is $380. The most common question I get with regards to this is, what if I'm paying extra on my car and credit card? Does this affect my debt to income ratio? And the answer is no. Banks are only concerned with the minimum payments and will not penalize you for paying extra on your other debts. So in this case, the maximum monthly payment Bob can qualify is $1,720. This, just like the other examples, will need to include principal and interest, taxes, insurance, private mortgage insurance, if you have it, and an HOA due that might be associated with the property. This video is by no means intended to cover everything you need to know about getting a mortgage. You should consult with a mortgage professional to find out all the requirements, individual financial institution, and the qualifying process. If you enjoyed this video, you might also like these other videos: how to estimate your monthly mortgage payment, and how to improve your debt to income ratio so you can afford a larger payment, plus many more I have created. I am always adding new videos, so please visit my YouTube channel again. Also, feel free to contact me with questions about real estate. I can be reached at 720-732-4167. Again, that's 732-4167 or by email at carl@denverboulderhomefinder.com. Again, that's Carl with a K at denverboulderhomefinder.com. If you would like to get my email newsletter, send me an email with your contact information, and I will be glad to add you to my list. Also, feel free to connect with me on LinkedIn. Be sure to mention you saw this video, since I do not accept LinkedIn requests from strangers. Thank you very much.